All right, so you're welcome to this evening's session. We would like to look at earnings per share. Earnings per share. This IAS 33. IAS 33. Earnings per share. Earnings per share. So, what do we mean by earnings per share? Or what is earnings per share? So, this is basically the, should I use the word earnings? Or the distribution that is attributable to equity shareholders, right? The distribution that is attributable to equity shareholders based on their shares that they have, right? Based on their shares that they have, right? So the earnings per share here, you're going to look at, would be looking at the basic earnings per share, and then the diluted earnings per share, right? The diluted earnings per share. So when I see earnings, the earnings here, I mean that um, that is the net profit. That is the net profit. The net profit attributable to equity shareholders, right? To equity shareholders. The net profit attributable to equity shareholders, right? So before we get the earnings, it means you are going to deduct the distribution that is um, to the non-equity shareholders, right? The distribution that is to the non-equity shareholders, such as the preference shares. So here, because you are saying that that is the earnings attributable to the equity shareholders or the ordinary shareholders, then it means you are going to deduct any distribution or any earnings to that of those who are not equity shareholders, right? To those who are not equity shareholders, or to non-equity shareholders, right? Such as the preference shares um, holders, right? The preference shares holders, the preference share holders. So here the keyword is just attributable to the equity, to the equity, to the equity what shareholders. So that is the earnings per share. It relates to the ordinary share. So the earnings per share has a formula. Earnings per share is um, what's the formula? That is the profit after tax minus the irredeemable. Yeah, it is irredeemable preference dividend. All over the number of ordinary shares. The number of ordinary shares. So here we can use the weighted average number of what ordinary shares. or equity shares, weighted average number of equity shares or the ordinary shares, right? So that is the earnings per share. So as I stated earlier, we are going to look at the basic earnings per share and then the diluted earnings per share. So for today, we'll focus on the basic earnings per share, the basic earnings per share. Right. So here, you are deducting the preference dividend, which is for the preference shareholders. So we want just the earnings for the equity shareholders or the ordinary shareholders. That is why we are deducting the profit after tax that we earn. We are deducting the dividend for the preference shareholders. And here the dividend we are deducting is the irredeemable. The redeemable preference dividend would be a finance cost. The redeemable would go to the word finance cost. So here focus is on the irredeemable preference dividend. Irredeemable preference dividend. All right. Okay, so now let's look at issue of shares at the full market price. When you issue shares at the full market price, all right. So when we issue shares at the market price, it means we are going to get some resources, right? We are going to get some money because we are issuing the shares at the full market price. So issuing it at the full market price, it brings an additional resource, right? So it brings, if you issue it at the full market price, it means there will be brings an additional what? An additional resource, an additional money. Because if you issue shares, you get money for that. So issues at the full market price brings an additional resource to the entity, right? To the entity. Right? But then the impact on the earnings is only from the date that we issue the shares. The impact on the earnings is on the date that we issue the shares. So as a result of this, we apportion it then the time that we issue the shares, right? Because the impact is on the earnings from the date that the shares were issued, from the date that the shares were issued. So let's look at some examples. So when the shares is issued at the full market price, then there is actually no problem with that because you are selling it at the normal price, right? You are issuing it at the normal price, so there is no problem with that. But then the problem actually occurs, that is where we issue it at the bonus or the right issue, right? When it is issued at the bonus or the right what issue, that is where the issue lies. That is where the issue lies. So let's look at some examples. Let's look at some examples.
All right. Example 1. A Limited has earning of 300,000 during the year ended at 31st December 2016. On 1st January 2016, A had share capital of 100,000.
Is it from her end or my end? Hello, am I the only one not hearing her?
No. On first, calculate the basic earning per share.
Am I the only one who hear the point?
Freezes from her end.
All right, then you have to start.
Hello, please, can anyone hear me?
Yeah, then I think if your network is worrying you, then someone else should read. Where you are? Is your network okay?
Yes, please.
Okay, you try again. It's okay.
Okay, so example one.
I can still not hear. Someone should read. Amanda, read. Amanda.
Example 1. A Limited has earned 300,000 during the year ended 31st December 2016. On January 1, on 1st January 2016, A had share capital of 100,000 1 cedi shares. On 1st March 2016, a further 16,000 shares were issued at 3 cedi 25 pesos per share. Calculate the basic EPS.
So you can see that it's asking us to calculate the basic earnings per share, and that is what we are looking at. So how do we get the basic earnings per share? What is the earnings per share from? So the solution to example 1. What is the formula for the earnings per share? Earnings per share, as we know, is the profit after tax. The profit after tax minus what? Minus the irredeemable preference dividend, right? All over the weighted average number of equity shares, right? Weighted average number of what? Equity shares. All right. So for the earnings, we already know the earnings. It said A Limited has earnings of 300,000. That is our earnings, which is the profit after tax. And we have any irredeemable preference dividend here? No, there is no irredeemable preference dividend. So I mean the total earnings, that is the PA PAT minus the redeemable preference dividend is the 300,000. There is no irredeemable preference, so the total thing is 300,000. Now, what of the weighted average number of equity shares? Yes, because the shares, we've been issuing shares in the subsequent period, there is a need to compute the weighted average number of ordinary shares, right? And the weighted average number of ordinary shares, this is how you can compute it. Assuming it's just one time ordinary share, we would have just divided it, right? So that would be the earnings over the ordinary shares. But this one is the weighted average ordinary shares. And the weighted average ordinary shares, you need to go through, you need to do some workings for it, right? Before you bring the total figure here to divide it by this. All right, so how do we, let me use this simple format. So it depends on whoever is teaching you and the person's strategy or the method that the person may use. But I go by this method. So on 1st January to 31st December 2016, on 1st January 2016, we had a share capital of 100,000. So after the beginning of the period, that is the 1st January 2016, the balance BD, that is at the beginning, was 100,000. Was 100,000, right? Was 100,000. What happens? Then saying that A had a share capital of 100,000, right? At one series. Right? So that's the 100,000. That's at the 100,000. On 1st March 2016, further 60,000 shares were issued at 3.25 per share, right? So it means this 100,000 had been in the business for how many months before another one was issued? I've been in the business for 1st March is the same as 21st, 28th, 29th February, right? February, March, and 1st March is like the same as the last period for what? The last day for February, maybe is it 28 or 29? So yeah, it means it has been in the business for 2 months, right? For 2 months. How many months? 2 months. So 2 over 12. And that will give you an answer. Then on the 1st of March, that is where we issued the additional what shares, right? Issue of what? Issue at market price. So we issued it at the market what price. And how much was it? It was 60,000 ordinary shares. Right? We issued 60,000 ordinary shares. Right. So the 60,000 ordinary shares that we issued, as at the end of the period, we're having how many? We're having 160,000. We're having 160. That is 100,000 plus the 60,000, giving us 160,000. And that was from March to what? To the end of the period, right? To the 31st December 2016. The 31st December 2016. So from March to 31st December 2016 is how many months? That will be, is it March, February, March, April, May, June, July, August, September, October, November, December. How many months? That's how many months? Hello?
10 months.
So that's 10 months, right? So 10 over 12, right? So 10 over 12. So what did we get for the first one? What did we get for the first one?
Please, the issue at market price is 60,000 divided by 160,000.
Sorry?
The issue at market price is 60,000 divided by the 160 times 10 over 12.
No, please. It is the
Oh,
summation of the first match, 100,000 plus the 60,000, giving us a total of 160,000.
okay. The first one, the answer is
As at the beginning, we have 100,000 shares. Sorry, 100,000 shares, right? And then as at March, we issued 60. So at the end of March, how many shares do we have in the business? That is the 100,000 plus the 60,000, giving us 160,000 shares in the business as at the first March 16. That will be multiplied by the remaining month, 10 over 12, as we said. So the first one, how much is it?
16666.67.
16667.
6. No, another 6. Ah, okay.
Is it like this? Or another 6?
Like there is a point, but maybe you're leaving it a whole number.
Okay. Then let's leave it in the whole number, right? Right. And okay, then this one's 160,000 times 10 over 12.
1 3 3 3 3 3. 1 and 5 threes.
1 and 5 threes. Okay. 2, 3, 4, 5. Right. So the total will be what? Total of these two.
150,000.
150,000. All right. So this is our wins, right? The weighted average number of equity shares. That is our wins. That is our what? The wins. All right. So then All right. So what did you get? What are you getting? Hello. What are you getting?
2.
All right. So that is our earnings per share. So example 2. Quickly, let's go to example 2. Any question? If there is no question, let's example 2. Example 2.
Hello, say.
Yes.
Please, can you go through the issue at market price, the 150 times the 10 on 12? My network wasn't too good.
Who is this?
This is Amanda.
You are saying that what?
I was saying that kindly go through the issue at market price again.
Okay. So the issue at market price here means it basically means the number of shares that we issued. So from the question, is it that
We have like we have 5.
who is that? Mercy. Right. Okay. So the issue of shares, I'm sure you're talking about the first March 16 issue at market price.
Yes, please.
Yeah. So from the question, it says on 1st March 2016, 60,000 shares were issued. So how many shares were you having as at the beginning, which is 1st January? Look at 1st January 2016. How many were you having?
100,000.
Exactly, you were having 100,000. On 1st March, you issued another shares. Means you told people to come and buy shares. So the shares in the business would increase because you are issuing a further 60,000. So the 60,000 is actually the number of shares. 60,000. If you want to know the total number of shares in the business as at the 1st March 2016, it is the 100,000 which was already in the business plus the 60,000 which is newly issued.
Okay.
And that was 60,000. That gave us 160,000 and the 10 months over 12. So before the issue, how many months? Before the issue, from January to March, 1st March is like 2 months. Well, 1st March in accounting is the same as the 28th or 29th February, right? The last day in the previous month. I believe you know that. That example,
Yes.
maybe 31st in accounting, 31st December is the same as 2016, is the same as what? 1st January 2017, right?
Yes.
So that is the same um, assumption or understanding.
Okay. Okay.
Welcome. So the reader should read for us example 2. Or Amanda, you read.
Okay. A company issued 200,000 shares at market price 3 cedis on 1st July 2016. There was no issue of shares in the year ended 31st December 2015. Relevant information. Profit attributable to equity shareholders for year ended 31st December 55,046 460,000 2016 and 2015 respectively. Number of equity shares in issue at 31st December 2015 1,020,015 800,000. Required. Calculate the EPS for the year ended 31st December 2015 and 2016. Please, I'm done.
So we should compute the earnings per share for 31st December 15 and then 2016, right? So we are going to do just that. Right. So what is the earnings per share formula as we know? Yes, earnings per share formula is what?
Profit after tax minus redeemable preference dividend.
Did you say redeemable?
Irredeemable. Sorry.
Right. Over the what? Wins. Right. So we have been given the profit after what? After tax minus the redeemable preference share, which is the earnings. Company is 200 shares in the market. There was no shares. The profit attributable to equity shareholders for the year is 550 or 460. That is what we need, right? We need the profit attributable to equity shareholders. The profit attributable to equity holders is the PAT minus the redeemable preference shares, right? The profit after tax minus the redeemable preference what shares. So we already know the earnings. We know the earnings for 15 and then 16. Now we have to do the adjustment for the weights. So the weights is where usually the problem is. Is this person learning financial reporting? Okay. So for 2015, we're having ordinary shares of what? So a company issued 200 shares at a market price of 3 cedi. On 1st July 2016, there was no issue of shares in the year ended 15. Oh, okay. In the year ended 15, there was no issue of shares. Oh, then the earnings per share would just be easy. We just calculate the earnings per share as the 460,000 for the 2015 divided by the number of equity shares. How much is it? Number of equity shares issued 31st December 15 is 800. Since there was no issue of shares in 15, well, then the earnings per share is just straight for the 2015. Just the profit attributable to equity shareholders over the number of equity shares. Yeah, done. So I think the wage adjustment would actually affect the 2016 figure. All right. So now let's 2015. We're having how much? 800 wins, right? I mean, the number of shares for 2015 is 800, right? What of the 2016? 2016, how many shares were we having? 2016, we had a balance brought down from the previous year, which is the 31st December 2015. So that will be as our first, is it January? 1st January 2016, we had a balance brought down. That is the ending of the 31st December 2015. would be the beginning balance brought down for how much? That is 800. Then what happens? Did you issue shares? Yes, we issued shares. On what date? On 1st July 2016. Okay, so 1st July 2016 is the same as 31st June. The 30th June, or I think we don't have 31st June, we have 30th June. 30th June 2016, right? 30th June 2016. It means it was in the business for how many months? This balance, this 800 shares, it was in the business before, for how many months before we issued the shares? Hello, let me hear from you. It was in the business for how many months before we issued additional shares?
6 months.
Exactly, 6 months. We issued the shares on 1st July 2016. So it means it was in the business for 6 months. So times 6/12. And then on 1st July 16, we issued the new shares. So new issue of how much? 200. The company issued 200 shares at the market price on 1st July 2016. So 200, right? 200. So 200, right? So 200, and then to the total will be what? 1 million. Is it 1 million? So this total would also last for how many months? The total of 1 million will last for how many months? We'll be in the business for how many months? Hello. Should I mention names? Then I'll mention names. Ima, Amachi Ima. Ima will be in the business for how many months?
5 months.
Did I hear 5 months?
Yes, sir.
Really?
Please, I think it will be 6 months.
Yeah. It should be 6 months because
Yeah,
it's
yeah.
already exhausted 6 months.
Okay.
Yeah. Already exhausted 6 months. 1st July. From 1st July to December, I think it's 6 months, right?
Yeah.
Right. Because we've already exhausted 6 months. So 6/12. Right. So that will give us the value, right? So give me the value. Let's hurry up. Let's hurry up.
Sir, for the first one, which is the 800,000 times the 6 divided by 12 will be 400,000.
And then the second one.
The second one will be 100,000. So the total will be 500,000.
1 million times half. 6/12 means is half. Half of the 1 million should not give us 100,000. 6/12 means half. It's like 1/2. half of the amount here. So I don't think it's 100,000. Isn't it 500? Half.
Yeah, 500,000.
It's 500,000.
So that would be 900,000. So 900,000 is the weighted average number of equity shares for the 2016, right? For the 2016. Now that we've gotten the weighted average numbers of equity for 2015 and 2016. Now let's go for let's compute the earnings. Earnings for 2015 is a straight thing. So that will be 460,000 earnings, 460,000 over the 800,000, and that is giving us how much? Then we compute the earnings for 2016 to 2016 is how much? $2016 is the 25, and then the earnings we had is it 900? Yeah, 900,000. So what are we getting?
The 2015 is 0.575.
Who is this?
Immaculate.
Okay, 0.575.
Yes.
Like this.
Yes, please.
And then the 2016 is 0.611.
0.611. All right. So usually when
Ones are plain.
okay, the 2 is okay. And then when you get a figure like this, which is less than 1, you always leave it in the what should I say? Is it the highest denomination? That is in terms of for Ghana cedis, in terms of what pesos. So this is in, let's say, Ghana cedis. This is in what? In Ghana cedis. So you leave it in pesos. So what would be the amount in pesos? You multiply it by is it 100? Yeah, multiply by 100, and then you leave it in pesos. So how much is that? Hello, how much is that?
2015 will be 57.5.
So 57.5 pesos. So assuming it's in
Yes.
dollars, what will be the name for it? Assuming it's in dollars, what will be the name?
Cents or
Yes, cents. Okay. So give me the second one, 2016.
61.1 pesos.
61.1 pesos. So that is it. That is it. Example 3. Example 3. Immaculate, to read example 3 for us.
Example 3. S&D Limited statement of financial position as at 31st December 2020 is as follows. Ordinary shares 1 CD each, 75 million. 10% irredeemable preference shares, 20 million. 10% redeemable preference shares, 10 million. S&D Limited has reported a net profit of 3,350 Ghana cedis for the year 31st December 2020. Calculate the earnings per share for the year ended 30th June 2016.
Okay, so here we have been given the irredeemable and the redeemable. So if you don't know the formula for the earnings per share, and you see that it is PAT, that's the profit after tax, minus the redeemable, then it means you don't know what you are doing. You don't know what you are doing. So they give you two preferential. You can ask yourself, why did they separate it? Because they know that you are going to use one. And it's up to you to know which of them you are using, right? So now we want to get the earnings per share. So earnings per share we know is profit after tax. How can you forget this? Irredeemable. Irredeemable preference shares all over the world, weighted average number of what? Equity shares, right? So now they want us to get the profit after, what were we given profit after tax? S&B Limited has reported a net profit of 3 million for the year ended. Right. So since there is no tax given, we assume that that amount is the profit after tax. That amount is the what? Profit after tax. So you have been given a profit after tax of 3,350,000, and then what else? You have been given irredeemable 10% preference shares 20. Right. Irredeemable. I don't know if I've been writing irredeemable preference dividend. I've been writing dividend or shares. It's irredeemable preference shares dividend. Well, let me see, preference dividend. It is the dividend that we want, not the shares. Shares dividend. So the dividend is the dividend, right? Is the dividend. All right. So now which of them to do the adjustment? All right. So this question looks like the adjustment is on the numerator rather. It's on the profit after tax minus the redeemable rather. So let's find the profit. Let's find the profit after tax minus the irredeemable. Minus the irredeemable preference dividend. Irredeemable preference dividend. So here the profit after tax, because we are not given tax, we assume that this is the profit after tax. That's profit after tax is given us from the question is net profit of 335,000, and then minus what? The irredeemable preference dividend. So we deduct less the irredeemable preference dividend. Preference what? Dividend. So the dividend will be, if given as 10%, 10% irredeemable. So 10% on this. So 10% on 20 million. So 20,000. Another 000. 20 million. Can see million at the top. So it is 20 million. So how much are we getting?
$200,000.
So that's 200,000. How much is our?
Please, it's 2 million.
Is it 2 million or 200? Yeah, 2
2
million.
million.
It's 10%, so 2 million. Okay. So what do you have? Is it not 1, 3, 5, 2? Just deduct 1 from this and the rest. All right. So now what is our earnings per share? Earnings per share is the profit after tax minus the redeemable preference dividend. We are getting 135 for that all over the ordinary shares, right? Here, the ordinary shares, there's no adjustment. I mean, there's no issue of shares. There's no issue of what shares. So that would be how much? It will still be ordinary shares at once. So this 70 million, 75 million, 75 million. The 75 million will still be 75,000. So what do we have?
$0.018 Ghana cedis per share.
0.001 Ghana cedis. So expressing it in the pesos,
1.8 pesos.
1.8 pesos. So that is the issued at the market price, issued at the full market price, right? So there is no problem with this, but then the problem comes when there is a bonus issue. So let's go to the bonus issue and then the right issue. The right issue is the same right issue that you learned in we learned in the financial management, right? Financial management class. That is what we did. We did the right issue, right? So that's the same formula. Right. So we are now with the issue at the market price, full market price. Now let's go to when it is issued at the bonus. So you have to read the question, see whether it is issued at the full market price or issued at the bonus or right issue. Okay. So so let's look at the bonus issue. The bonus issue. All right. All right. So when is issued at the bonus issue, it's also known as, let me bring this, also known as the capitalization issue. Capitalization. capitalization, or even scrip. Scrip was dividend. Capitalization or the scrip dividend. So that is still the bonus issue. If you don't see bonus and you see the capitalization or the scrip dividend, scrip, note that it is talking about the bonus what issue. It is talking about the bonus issue. So the bonus issue here, here it does not provide additional resources, right? Does not provide. You see, with the market issue, the full market issue, it provides additional resource, right? Because when you issue, the public would buy it and then they will pay money for it, right? They will buy it at the full market price and they will pay money. So you are getting a resource, money for it. But with the bonus issue, you are giving bonus to existing shareholders. You are giving bonus to what? Existing shareholders. Do they give you an additional resource? No. Right? Since you are giving them what? Bonus. It is a bonus. It is free of charge. It does not provide what? Resource, an additional resource. It does not provide additional what? Resources to the what? Issuer. Okay, so it does not provide what? Additional resources to the what? To the issuer. To the what? To the issuer. All right. And here to we assume that bonus issue existed at the beginning of the what? Of the period, right? So we assume that existed at the beginning of the period. So assuming the bonus issue was somewhere in the middle, like 1st July 2016, we assume that the bonus, even though the bonus issue was on 1st July, we would reinstate it. We would what? Reinstate it, or we would state it at the beginning of the period, right? We would assume that the bonus issue has existed at the beginning of the what period, and the bonus issue will lead to what? A bonus fraction, right? The bonus issue will lead to a bonus fraction. So that we are going to apply the bonus fraction. We are going to apply the bonus what fraction to it. Okay. So let's look at an example. Let's use an example to explain that. Right. So let's say, so example, let's say a company holds 100,000 shares. 100,000 shares, right? And this 100,000 shares, and it makes a one for 10 bonus issue. 1 for 10. Always the figure after the 10 is the denominator, right? The figure after the what? 4. The figure after the 4 is what? The denominator. So here the 10 is the denominator. And the numerator will be what? The 10 plus the what? Plus the 1. Right? The 10 plus the 1. That would be what? That would be the numerator. So it will be 11 over what? Over 10. Or all the same, that's given 100,000 ordinary shares. 100,000 times 1 for 10. So how much are you getting for that? So if you are having 100,000, you are getting a bonus of 1/10. How much is the bonus? Or how many number of shares for the bonus?
10,000.
10,000. So in all, how much will you be having in the business? Number of shares, total number of shares will be what? What is the total number of shares? Is it not 110,000? 110,000. Yes. So this 110,000 over the number of shares that you are having will give you what? Is it not? This one will cancel this. This will cancel this. So you are having 11/10. So basically, when they say 1 for 10, it is 11 over what? 10. Okay. Example: 1 for 7. What will be the bonus fraction? 1 for 7 will give us what?
To 8/7.
Exactly. That will give us 8/7. So the number after the 4 is always the denominator. The figure after the 4 is the denominator. All right. So that is the bonus issue for you. That is the bonus issue for you. Bonus issue. Okay. So example. Let's look at an example under the bonus issue. Let's do example what? Okay. Read example 5.
Example 5. Please, I'm reading.
Okay.
Example 5. At 1st April 2015, S&D Limited had 7 million Ghana cedis. 7 million 1 Ghana cedi ordinary shares in issue. It made a bonus issue of 1 share for every 7 held on 31st August 2015. Its earnings for the year were 1,150,000 Ghana cedis. S&D Limited's EPS, earnings per share for the year ended 31st March 2015 was 10.7 Ghana pesos, or yes. Required. Calculate the EPS for the year ended 31st March 2016, together with the comparative EPS for 2015. That would be presented in the 2016 accounts.
Okay. So first of all, what is our formula for the earnings per share? The after tax minus the redeemables. So this is the general formula over what the wins. I keep on writing the formula. All right. So now, what is for the service you complete for 20 what? 16 and 8 comparative 15, right? So earnings per share. So let's do for 2016. What is the earnings per share? How much is the earnings? 7 million ordinary shares. It made a bonus issue of 1 share for every 7. So one for 7, right? Its earnings for the year were 11550, right? So for the year, so that is the earnings for the 2016, right? For the year, so that's the earnings for the 2016. So the earnings for the 2016 is 115,000 all over the ordinary shares. How much is ordinary shares? How much is ordinary shares? So we have to go and do the weighing, right?
Please, they've written 2015, so why is it 2016 this one?
So for the year is what is 2016. I think, did they say 2015? That amount is for 2016. And this is the earnings per share for the year 31st 15. Look at this. Earnings per share for 2016 is how much? I think they've given us the 15 already. So with this one, they are referring for the year, current year. The current year is 2016. Are you okay?
Yes,
Hello.
please.
Okay. So let's do our workings for the weighted average number of equity shares. So the weighted average equity share is how much? For the year, balance brought down. Balance brought down is how much? On which date? 1st April 2015. So as of 1st April 15, balance brought down is how much? It's 7 million. And what happened? So when did you issue the shares in the year? You made a bonus issue of 1 share for every 7 held on 31st August 2015. 21st August 2015, right? So that'll be how many months?
5.
5 out of 12.
So 5/12. So April, May, June, July, August, that's 5. 5 out of what? 12. All right. And then on the 1st, when did he issue the shares? August, 31st August. That is 31st August 2015. Issued what? Issued shares, new shares. So what is the bonus? So bonus issue. The bonus issue, sorry. And the bonus issue was how much? Was 1 for 7. So 1 for 7 times the 7 million will be how much?
1 million.
1 million. Okay. So what will be the total number of shares we'll be having in the business? We'll be having the 7 million plus the 1 million. 7 million plus the 1 million. That's giving us 8 million, right? We're having 7 million at the beginning, and we issue the bonus 1 million. So the total will be 8 million. The 8 million for how many periods? From 31st August to the end of the period is how many months? The 31st August is even the same as 1st September, right?
Yeah. 7 out of 12.
7 over 12. How did you get that?
It's supposed to be 12 months, and then there was no issue again, so I left the 5 from the 12.
Oh, okay. Okay. So 7 over 12. And what is that giving us? This 7 over 12 is giving us how much? So now, we said that the bonus issue would assume that it existed at the beginning of the what? Of the period. The bonus issue assumed to exist at the beginning of the period, right? Where is it? Where is that statement that I made? Yeah. Yes.
Please, I thought they said it made the bonus on 31st, I guess. So we'll start counting. Like we'll multiply the 8 million by September, October, November, December.
It started what?
The bonus issue was on 31st, I guess.
Mm-hmm.
So I thought the 8 million will be calculated on the rest of the month.
When did okay, count from April to December and let's see.
Nine.
That's giving us 9. Okay, so the total number of period is 12 months, right? And with the 12 months, we have used 5 months, so the remaining will be 7. The remaining would be 7 because if you multiply by the 3, it doesn't make sense.
Okay. I've now seen it. The year ending is March. Okay.
Where did I state that? So I said assume that the bonus issue existed at the beginning of the period, right? Existed at the beginning of the period. So if it existed at the beginning of the period, it means the bonus issue is at the beginning of the period, right? So we will bring the bonus issue before the existed, before the what? Before the bonus issue. Where is it? I mean the bonus fraction. How much is the bonus fraction? 147. So what is the fraction? Bonus fraction.
8 divided by 7.
The bonus fraction is 8 over 7. So we assume that it existed before the what? Before the day that we issued we did the bonus issue, right? We assume that it existed before the what? At the beginning, it existed at the beginning. The bonus issue existed at the beginning. Even though we issued the bonus issue on which date? Where is the date? Bonus issue, which date? 31st August 15, right? 31st August 15. The 31st August 15, we assume that it existed at the beginning. At the beginning will be what? The 1st April? 1st April 2015, right? 1st April 2015. So that is the beginning. 1st April 2015, we assume that the bonus issue existed. So we would apply it. Right? So that's why you're having 8 over 7. That's why we are having 8/7. So what are we getting?
Please, I didn't get it. Can you go over?
Okay. But did you get the last one? The first question that you asked, I'm sure you are now fine.
Yes, please.
Okay. So, because we are preparing us at 2016, I think you've seen the date now. March 31st, March 2016. So, with the bonus issue gives us a bonus fraction. And here from the question, it says 1/7. So we are having 1/7. And the 1/7, the bonus fraction is 8/7. So I said the 4. The figure after the 4 is always the denominator. And then the 1 plus the 7 gives us the numerator. That is the bonus fraction. In the bonus issue, we are supposed to get something called the bonus fraction. The bonus fraction is applied at the beginning, right? At the beginning of the year. Even though the bonus issue existed somewhere during the year, in the middle of the year. All right. So I'm saying that under the bonus issue, we get something called the bonus fraction. The bonus issue is when you give out the shares to existing shareholders, and that would happen during the middle of the year, right? Not like somewhere in the middle, because at the beginning you issued a new shares. Now, after some time, you would issue a bonus shares to existing shareholders, and that gives us the bonus fraction. The rule is saying that we apply the bonus fraction as if it existed at the beginning of the period. We apply it as if it existed at the beginning of the what? Of the period. So here, what is the beginning of the period? Beginning of the period is 1st April 2015. 1st April 2015. If 1st April 2015, then that will be the beginning. When did we get the bonus issue? That was 31st August 15. So we would apply it up to the point that we issue the bonus issue, right? But not on that date, not on that bonus issue date, but up to the point. So assuming we have two